Welcome to Trevisa Financial. Trevisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Trevisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Trevisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Trevisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Trevisa Financial, no one serves first-time homebuyers better.
Hello, everybody, and welcome to our EEP Scenario Monday. We will have some Q&A in a bit, and as a reminder, our chat is closed, so please raise your hand and let's talk EEP. But for now, I'm going to review a little bit about Trevisa, myself, and then our EEP program for any of those that are new with us today. So my name is Monique Manaya, and I have been in the mortgage industry since 1997. I have been in all areas of the arena, from being a broker to retail to wholesale. And most recently, I was the EEP production manager over at the government entity. I managed and oversaw processing, closing, funding, title approval, and the Tule River signers. I helped progress the processes and help develop more underwriting guidelines and what worked, what didn't work. And now over here at Trevisa, I am excited to help you with your EEP business. And that's one thing that I loved about Trevisa, is they understand that creating wealth through homeownership is huge. We strive to make homeownership a dream for everyone. And so our innovative loan programs such as Earned Equity can definitely help do that. Earned Equity. What is the government entity? So the government entity is a Native American tribe named Tule River. So essentially, what's happening right now? Your home buyer is not qualifying for traditional financing. So what you do is you go ahead and you get your home buyer pre-approved for the EEP program. Your home buyer can go out, find a home, put that home under contract in their name, put down the earnest money deposit, and then there's going to be two steps that occur simultaneously. After an assignment addendum is signed by both your homebuyer, the seller, and Tule River, we're going to complete the process of that purchase with Tule River through Trevisa FHA financing. Your home buyer is going to get approved through the government entity for their homeownership agreement. So on the day of closing, simultaneously while Tule River is signing the FHA loan docs to purchase the home, your home buyer is signing the homeownership agreement with a memorandum that is recorded on title. This secures their interest to the property. In addition, they receive mortgage payments. Their escrow is managed through their servicing department over at the Tule River servicing department. They get a 1098 interest statement at the end of the year. So a few things about EEP program in regard to guidelines. We have 3.5% down for I-10 borrowers, non-permanent resident aliens, including DACA, and of course, your US citizens. We have low and no credit scores, so down to a 580. And also, if you pull and there's no scores, that's perfectly fine. We allow alt trade lines if needed. We have a 3-month bank statement program, and that's for self-employed W-2 and 1099 with DTIs from 50 over 60. There's no source or seasoning of funds to close. So if you have some home buyers that just don't have those warm and fuzzies about the financial institutions and they like to save their money at home, they can deposit it a week or two before closing with a letter of explanation, and that's okay. Along with bankruptcies, specifically, what I love is Chapter 7 bankruptcy. They can be in the bankruptcy, out looking for a home, put their earnest money down, go through the process, and we just need to show that it's discharged 1 day before closing. And the bankruptcy does have to show on credit as well. For property types, we have all property types that are FHA approved as well. So 1 to 2 units, PUDs, condos, manufactured homes. For those condos, please let's make sure that they're FHA approved. If for some reason you don't have access to see that, reach out to us and we're more than happy to take a look. Also, seller concessions up to 6% of the sales price. This is going to be very important to help offset your home buyer's funds to close. So 6% of those seller concessions, you want to try to tap into all of them. When you're qualifying your borrower, so there's many scenarios to look at. Of course, the 3.5% down. To full doc. We can do full doc also. We just need a prior year W-2, pay stubs, and a written VOE. And then, of course, we have the alt doc, which is 3 months bank statements. And this is really good for 1099 seasonal workers, gig workers, tips that aren't claimed. We also allow gift funds, although you cannot use gifts for reserves. And again, I have to mention it again because it's huge. DTI is 50 over 60. We require 12-month VOR history, 0 times 30. And also we need 12 months of employment. Also want to mention, so our funds to close are going to include the bottom line from the FHA settlement statement, final CD for the government entity Trevisa file, some entity closing costs, and their first month's mortgage payment. And again, we can take alt trade lines. So if you have a borrower and you pull the credit and they only have 1 credit score, as long as it's above a 580, that's perfectly okay. If they don't have any trade lines that are reporting on credit, we can take those alt trade lines. It has to be 12 months, satisfactory, no lates. I do want to touch a little bit about our tiered expense ratio. So for self-employed borrowers, there is a standard 45% expense ratio. That's going to be deducted. But we do have this tiered expense ratios that allow for anywhere down to 0 to 10%. Why are we doing this? We understand that some borrowers, 45% standard expense ratio is just way too high, especially for those in the service business. So if you take a look here at the service business, you know, consulting, accounting, legal, therapy, counseling. I have some that are house cleaners, construction. They don't have any employees, or maybe they have two. We can have them qualified on a much lower expense ratio. If you see here on the diagram, 10%, 25%. And how they can become eligible for this is one item would be a CPA letter or letter from accountant, online internet documentation. We just need to see sufficient documentation to help provide information of what their business is, whether it's service-based, product-based, and if we can determine how many employees they have. So this is a great alternative to the standard 45% deduction. Going back to ITIN. So the ITIN market is very competitive out there, except for when you take a look at this graph, most of the lenders out there require anywhere from 15 to 20%, 12 to 24 months bank statements, 43% DTI. And if you want to go any higher, even up to 55, you need 2 comp factors and 700 plus credit scores. Trevisa Financial and our earned equity program, low minimum down payment of 3.5%, 3 months bank statements, 50 over 60 DTI with a 580 credit score that is just with one major credit bureau. So we understand that the EEP product is very unique. It's got a lot of moving parts, and so we have a lot of support for you. We have our dedicated email address at eepquestions@trevisafinancial.com. We also have our dedicated phone line, 877-888-ASK-EEP, and amazing account executives with Ben Slayton and Norma Summers. Myself, again, I am the sales support manager, and we want you to be confident in this program. We want to help you succeed. So we're more than happy to not only facilitate a private training on EEP, but also on our TPO Connect and how to submit the files, what the process involves. Again, private trainings if you have some operations, or if you even have realtor partners that you want to be able to explain this program to them, but feel like you might not be able to get everything right. We want to help you. We want to be there for you. We don't have any questions today, so I wanted to thank you so much. One thing that I want to let you all know about is we have our masterclass webinar this Wednesday. We have a very special guest that I know has some exciting news that he's going to share. And I really would love to see you guys there and see you join us for that. Have a wonderful day, and we'll talk to you later. Thanks. Bye-bye.